It's the end of inflation, some might tell you. There's an article that came out that's showing figures of grocery prices falling down 0.2% month over month. Still, of course, elevated around 5% year over year. And we're going to look at a chart in a second with the year over year inflation right here. So this is the chart going back to 1970, and the grayed out areas are recessionary periods that are usually, if not always, associated with some kind of market downturn. Now, not too long ago, before I get into this chart, I talked about and showed the interest rate, federal interest rates that are set by the central bank, and I showed how they could be an indicator for recessions and market downturns. All those things happen at the same time. So the Fed became a very good predictor as to how the market's going to go. Every time they would slash interest rates, a recession followed. And over here, what goes in tandem with all that is the inflationary periods. There are only two reduction of year-over-year inflation periods that I found. They don't correspond with a recession. One of them is here in 1986, and one of them is here in 2014. However, in 2014-15, I lived through that period, like many of you, and I remember that things weren't looking that prosperous anyway. I mean, we might not have been in a recession, but it wasn't, we were at about zero. Look at this. There was zero year-over-year inflation in 2015. But it wasn't looking like a big market boom, that's for sure. 2015 was basically the lows of the gold complex, the precious metals complex, and a lot of industrial metals and a lot of materials. So that was definitely a non-inflation period, but it was not necessarily because of recessionary pressures. Perhaps it was because of China demand. There's many reasons. I'm not going to go into speculating as to why, but my point is that these periods of reduction in year-over-year inflation are rare. Now, this is not inflation, okay? This is year-over-year inflation per year, right? So if you were to look at the value of the dollar going, through the years, it would be an exponential graph, of course, right? Every year, some amount of percentage is being tacked on. This is just a graph of this percentage each year. So it's important to know how to read this chart because, you don't want to be under the false impression that the dollar is worth more now than in 1970. Okay, that's not what the chart shows at all. So food prices are still actually higher at restaurants, okay, by over 8%. But the grocery stores, including eggflation, has come down. So eggflation is down about 10% or something like that. Grocery prices are down altogether by 0.2% in March, month over month. But of course, still up year over year. So inflation is coming down. I mean, look at this, from 9.1% to 5%. It keeps going down year over year, and it's probably going to keep going down year over year. And that is just another sign that recessionary periods are coming. Are they going to be like the doom and gloom recessionary periods that some people predict and talk about? I doubt it. I don't know. But is there going to be a market turn? Probably. Right? Markets are probably going to go down. And what am I doing about it? I mean, that's a good question. So I'm going to do a little account review to show you what I'm doing. For a first time since 2019, I believe, I'm actually holding on to cash. You'll see that account value is near 140 and has been around 140 for a long time now. Since February 3rd, my account hasn't really changed. It's improved maybe by $1,000 in dividends or something like that. But I'm holding about $37,000 in buying power. In cash. I have a free $1,000 in margin that I'm not being charged for through Robinhood Gold. On that cash, because of Robinhood Gold, don't sleep on Robinhood Gold. It's good. It's a good product. This cash is collecting 4.4% interest, which is more than you would get in most brokerage accounts. There might be some that give you more. I'm not sure what Interactive Brokers gives you, but it's probably less than 4.4. I can't imagine it's higher. This is probably actually the number one. But you do have to pay the $5 premium for gold membership. It's a good deal. You get so much. You get $1,000 free leverage. You get, some Morningstar research, which is not that valuable in my opinion, but it's still there. You get some other perks. You get instant deposits, things like that, up to $250,000 now. So I don't want to make this an ad about Robinhood, but I'm personally enjoying Robinhood Gold. If we go into the account under the investing tab, you'll see a more graphically represented breakdown. Here's the cash. Here's the stocks and options. Okay, these are my three positions that I'm left with. By equity size, Main Street Capital is actually number one position right now. Then it's Apple, and then Realty Income. By total return, Apple's number one. You can see how they're almost evenly spread though. So each one represents a lit up portion of this circle graph. Options. My trades. Next. Okay. So what trades have I made lately? Well, lately I've bought a few options just so I don't miss out any potential upside. All right. Option number one. I bought 3 AG calls. Now AG is a silver miner. Okay. It's currently sitting at $7.69 dollars. It's up, quite a bit in the last 5 years, but today is down. It's up a little bit. I'm still down on my options because calling options you get burned through a theta decay, and so I'm down even though the price hasn't really changed much in the past week. It's actually gone up in the past week, and even in the past month. I'm holding them to expiration. I don't know what's gonna happen with First Majestics, but traditionally First Majestic Silver has been a very volatile silver company that takes big advantage of any upward movement in silver. And I thought because gold broke through the $2,000 barrier, silver would experience a nice move too, but it hasn't. Another losing call option that I bought, thankfully these are cheap, is JD. All right, so I bought it, I think, today. So I'm only down 10% on this particular option, even though it's lost 43.8% of its value today. JD had a really bad day with a lot of the other Chinese VIE ADRs. JD was down 7.67%, and I think Alibaba was down something similar, not as much though. Alibaba was down, no, it's 5 years, sorry. Was down about 6%, 1.23 in the aftermarket. These are starting to look interesting again. I mean, JD's VIPS was my other favorite, but it's $5 higher than I last sold it. So I don't feel like such a loser if I'm going to rebuy back in that position. But JD is not. So JD is actually sitting at lows, near lows. Okay, if we go to the 5-year chart, last time it was around this level was in October 2022. And now it's at a similar level, a little bit below perhaps. So that means it's still got some lows to go. I'm probably gonna guess to around, this level here. So I guess about the same level, perhaps a little lower, maybe 35, 30. And I may actually sell some puts around that. But definitely looks like the pain's not over for the Chinese stocks. So currently I'm just playing a possible bounce by buying a couple call options a few months out. I may buy some more, but currently that's what I got. I still have the PayPal options, which are probably going to expire worthless. And then one call sold on Apple that I've already collected the money from, basically. So those are my options positions. Here's $26. I've collected $1 today. Nice. So the options have already played out, mostly the rest of them. In the meantime, I'm collecting interest on my cash. $41.8 so far this month. That dividend is to be deposited into my account at the end of the month. On my watch lists, I'm watching with very heavy heart Smith & Wesson be over $12 when I exit a position, a really large position, $80,000 position, at around $10. So I could have had, what's 8,000 times 2? Could have had another $16,000 or so in my pocket if I hadn't exited. Plus, I exited some call options that I sold against the position, so I would have gotten some money out of that as well, which probably totaled another few $1,000. So huge mistakes there. $20,000 mistake. This company here is the newest one on my watch list, Stanley Black & Decker. Its valuation's good. I made a video about this one as well, which brings me to my last topic here. Well, first, let me tell you what other trades I'm going to do. Besides the ones that you see here, I'm thinking of just keep playing possible upsides with very cheap call options and not actually enter any large positions because I want to have cash handy. Why do I want to have cash handy? Because of the indicators I talked about in the beginning of the video, which is the inflation indicator, and then also the interest rate Federal Reserve indicator, who's been a very much a leading indicator for possible downturns and or recessionary periods. So I'm doing my best against my nature to hold as much cash as I can in my brokerage account and try not to spend it because, spending it eliminates my chance to take advantage of any possible downturn. In the meantime, I've been trying to keep busy. Instead of making trades and researching option premiums, I have been doing, moderately deep research into random companies that I like. I did a lot of car makers. I did a video on Ford, GM, Tesla, Stellantis. I'm thinking I still have to do Daimler, right? Naturally. And but I'm down to do any other companies. I also did Wheaton Precious Metals. I did UBS Bank in the wake of the mini regional bank financial crisis. So I've done a lot of company reviews. I want to keep doing them to keep my free time occupied, however limited that might be. If there's a company that you'd like me to review, I do a shallow dive or a more in-depth dive, especially in the number side of things. I'm not going to be going around and visiting the companies on site. Although one day I would love to do it. I just don't got the time. I would love to go to a company site, speak to the CEO or whoever is in charge there in the factory of some company or their offices and report back with all of my questions answered and perhaps even videotape it. What if I just stop unannounced and videotape? That would be cool. Although they might not let me do it. I would love to do it, but I just don't have the time to do it. So I'm going to have to use the information that's available on the internet and give you my interpretation of what's going on, including valuation metrics, including, 10K information. And I like to look at just what's going on in the company from assets and liabilities side of things to try to figure out what the premium of each company is that the market is assigning to it. So in order to figure out if the company is a good buy right now or not. And then if I like the company, I'll put it on my watch list and I'll watch it. If it comes down to a price that I like, I'll buy it. Or at least I'll sell some puts on it. And if it doesn't, I still might buy it if I think that market's turning. Let's say the recession is done, the Fed has lowered rates and the bear market has played itself out. Let's say the market's down 30-40% from here. Why wouldn't you buy? That'd be crazy. The only question is that I'm asking myself, and everybody should be asking themselves if they're holding cash, is how long can you hold it? Right? So that's the name of the game. I don't know how long I'll be able to resist my instinct to just invest in something that earns a higher yield than 4.4%. That's the real question. All right. It's going to be a nice and short, sweet video. Let me know if you like this format. I mean, this is mainly a video log, I started this video log because I wanted to record how I'm feeling and what I'm doing when it comes to investing so I can learn. It's kind of like a journal that I keep for myself, but it's turned into something more. I mean, I put all my thoughts out here, including the companies, what I think about the companies. I post them on the YouTubes, and I even tweeted on Stock Twits. I even have a Twitter, believe it or not, which I'm not going to link below. Okay. If you find me, you find me. So I've been enjoying that process, actually. Just putting my thoughts out there. It feels good. It feels a little kind of like a release, like therapeutic, instead of just holding them to myself. If there's a company you'd like me to talk about, I'm totally open to new ideas. Somebody suggested I did Stellantis, and I really didn't expect Stellantis to be such an amazing company. That was the video I did before this. I highly suggest you check it out because I actually did a lot of looking into Stellantis, at least by my standards, as much as I can without doing any travel abroad. So check that out and let me know if you like it. Let me know if you like the format of this video, and I'll try perhaps to cover like one relevant topic, like for example this end of inflation article, and eggflation. It's posted on Yahoo Finance apparently, but there are other articles that I could cover. For example, no one's going to lose money on a deposit in U.S. bank, says Warren Buffett, right? ChatGPT may be able to predict stock movements. I read through that one actually, and the entire time I was reading that article, basically what the guy did was, he asked ChatGPT to pretend to be an expert financial advisor and to predict whether the news are good or bad for a specific company when they come out. And apparently it's a pretty good track record when it comes to predicting the price of stock movement than the very next day. But by the very next day, everything's priced in anyways. Sometimes things get priced in before the news comes out. And even if there was some kind of predictive edge on the company, on ChatGPT, I don't think these researchers realize that timing and execution of the actual trade is a lot harder it's a lot easier said than done. Like if you try to execute something timely before the market, before the news hits, you see how hard it is. It's really not that easy. Okay. So, and the entire time I was thinking, okay, even if they have some kind of algorithm to put that into effect, it's just going to get arbed away. It's going to get arbitraged away by the billion hedge funds out there that are implementing the system currently into their trading, So anyways, I just thought it was silly. Okay, that's it for now. Let me know if you have a company you want me to review. I'd love to do it. Peace out.